Hello everyone, my name is Sriram Iyer. I'm an analyst at the Commodity Research Desk at Reliance Securities. Welcome everyone to this week's Bullion Weekly Podcast. So international gold and silver prices are on their way for another weekly gain in a holiday shortened trading week. Prices moved higher, lifted by a retreat in the US dollar index and geopolitical tensions, along with a drop or ease in the US benchmark treasury yields. The dollar retreated along with the slide in the treasury yields from a 2-year peak. Probably investors book profits ahead of that crucial US Federal Reserve meeting next week. Prices also found support from the geopolitical tensions around Ukraine and in the Middle East. However, the key trigger for the prices this week was inflation. Again, prices benefited from its appeal as a hedge against inflation as oil prices rose to the 2014 highs, sparking concerns that price pressures could intensify further. Data also showed that inflation in the Eurozone climbed to a rate of 5% in the month of December, the highest since the single European currency was created. Additionally, we also saw that Britain's cost of living crisis also worsened in the month of December after inflation jumped to its 5.4%, its highest in almost 30 years. Driven by mainly higher cost of clothes, food, and footwear. So I think inflation, we can say that the inflation was the key driver of prices this week. Looking ahead, investors will be focused on next week's meeting of the US Federal Reserve, which could likely signal that it will raise rates in the month of March for the first time in more than 3 years. The Fed fund futures have already factored in or priced in the March tightening and possibly 4 rate hikes in the year for 2022. At the same time, a slightly dovish Federal Reserve will push investors towards the safe haven appeal of the metal. Additionally, as I mentioned earlier, hot inflation will continue to drive investors to the inflation hedge appeal of the bullion. So I think bias will remain positive next week, at least ahead of the Federal Reserve meeting. The key trigger will be the Federal Reserve, and further movement will depend on the outcome from the meeting. So if the Federal Reserve remains hawkish, then we see more exit from this counter. Possibly going forward, we can see big profit taking as well. Also, on the other hand, if the Fed remains dovish, then I think markets will have already priced in rate hikes, and if the Fed remains dovish and if they signal only 3 rate hikes, then I think markets will look at this as slightly on the dovish side of things, and investors will move towards the bullion side of things. Apart from the FOMC meeting, we have the markets will also look ahead to the US GDP number in the coming week. And the Fed favored core PCE price index, which is the gauge for inflation, which is keenly tracked by the Fed, which is also expected out next week for the month of December. So these two will be the main trigger points along with the FOMC meeting. So till that time, we feel technically that if spot gold settles above the 1830 mark this week on the international side, it could continue its bullish momentum up to the next resistance zone, which is between 1855 to 1785. 1875. I apologize. So it's 1855 to 1875 will be the resistance zones if the markets are able to hold on above the 1830 mark. But if the markets are not able to hold on above this mark, then the markets could move back to the support zone of 1815 to 1790 levels, which has become a kind of a short-term bottom for the markets at least on the international side. On the domestic front, if MCX gold February contracts settles above the 48,300 mark this week by this Friday evening, it could continue its bullish momentum next week up to the next resistance zones, which is at 49,000, which will be the main resistance zones for the market ahead of that Federal Reserve meeting. However, a close below or a settlement below the 48,300 mark could again see the market consolidate between the range of 47,800 on the lower side to 48,400 on the upside of things going forward. Overall, as I mentioned earlier, the main trigger will be the FOMC meeting in the coming week. So that's it from our side. Thank you for listening. Have a pleasant day. Thank you.